Hey, good morning, everybody. Happy Wednesday, bright and early. GameStop sneaking in a little SEC filing this morning, dropping an 8K. Let's go ahead and pull that up here. They posted it this morning. Let's see. I think it was about 5:45 Central Time, 6:45 Eastern Time. Posted an 8K with a press release. On May 28th, GameStop issued a press release announcing that it had purchased 4,710. That is correct. 4,710 Bitcoin. So GameStop now owns 4,710 Bitcoin. Puts that at market value roughly about $513 million with today's current market price. So yeah, I'm not sure when they purchased. I think a lot of people assume they bought it on the dip, and they more than likely did. Uh, but we'll have to see here. But like I said, current value around the whole of the holdings about 513 million. I know people were excited with GameStop. I saw the stock had spiked actually this morning, I believe, to a high in the pre-market 37.49. Yeah, it popped real quick on the news bright and early this morning. Now trading around 35.92, and we'll come back and look at the daily chart, which is up there. Your RSI is extended at around like 79 yesterday, with a solid close at 35. I know a lot of people are excited. We saw the option flow yesterday. We've been lining it up on this name since March. We've been talking about the gamma that was building into May and the June option expiry. We talked about those 26, 27, $28 calls, and as this thing approached 29 and 30, it could get a little wild and get a little spicy. I've said it last year. I've said it a few times this year, and you got to see it play out. We take a look here yesterday at GameStop, about 170 mil in total option premium, and about 6 million in net call premium. So net put premium, which is this red line here, pretty flat for the day, and net call premium just stayed moderately paced. It wasn't a over the top day, but it was a pretty good day in that regard. Some of your top chains by the impact here, I know a lot of people are talking about those $41 calls and the $39 calls. That was part of a spread. So we'll talk about that as well. We see some of the $32 calls, which closed in the money for this week. Some deep in the money calls, the $16 for January and 26.50. So we'll take a look at some of this. We'll take a look actually at the 39 call. Because there was some, not misinformation, but just kind of give you the breakdown of how this worked out over the last 3 days. So we note here where they sold a large amount of them on May 23rd, and then it was about 45,000 for about 3 million. And then you see here yesterday purchased 45,000 roughly volume for about 5 million. And if you look here, historically nothing's really gone down on the chain. A few options here, but on Friday we saw that volume, and then we saw it carry over into open interest on Tuesday once we came back from the holiday. And then yesterday's volume of 53,000, you'll note the open interest decreased. Well, we have to look at these last two transactions because the last 2 days they were both multi legs. So, how this broke down was this particular trade on Friday. If you remember from yesterday's video, we talked about this. We talked about what they were actually doing here with that. So, we're going back to Friday's trade because with unusual whales, we got to go back, look at the data so we make sure we give you the most accurate information here. Because what they did originally Friday was sell the $39 calls to finance the $36 calls as a call debit spread. I don't know if you saw the video where we talked about that, um, but let me sort this by premium so you can see the largest size. So you can see here where the waves of $39 calls that were being sold on Friday. These were all part, like I said, of these multi-leg transactions where they were selling the $39 calls and buying the $36 calls. So it's part of the call debit spread. So eventually, once your spread works, that's why you close out that position. So what you saw is, boom, they sold those as part of their spread. Then you saw the volume yesterday and bought back because they took the gains on the spread already from the 36 call that they had bought. So you'd be like, well, hey, why didn't they da? Well, if we go back here, we can look at the $36 call and look at that profit as well. And I'll show you that here. So when they did the first spread on Friday, They came back and did a 39 and 41 spread yesterday on Tuesday. And we won't get too caught up in it, but just so I can show you that way you see the full information. You got to see so many people will share options flow, a lot of it with multi-leg transactions, and they're not representing the full narrative. So that may not present the best information to you. So that's why I try to offer that in that regard. So if we look at the $36 calls, then you can see how these operated. Let's see here. Because they're just slightly out of the money, but here they are, and they're still in the position. So they're going to let that one ride. And they closed up the 39s. And you would think, well, hey, Ryan, it looks like, those 39s, they kind of closed up at a loss. Because if you're saying, they sold them as part of a spread, they sold them at what? $70, around $70 each, and then bought him back at 100. You're like, hey, they kind of lost about $37 a contract. And yes, it might appear that way that they did. And I would say, yes, you're actually right, partially in that regard that they probably did. But I want you to see this here, this $41 call. They got tricky though, okay? What they actually did was, yes, they bought those, but they sold this. So if we look here yesterday on the $41 call for this week expiry, which is out of the money, there's 48,000 volume, 45,000 carried over into new open interest. Look at the amount of the premium though, right around the amount of the 39 premium we just looked at. So these were mostly sold to assuming sold to open in that regard. But if you note here, strong multi-leg. So again, part of another transaction, and I'll show you that. That's why I like showing you all the information. The other people that just post, hey, look at the $41 calls, that's all they'll tell you. They won't give you, they won't build it, the narrative, and show you the narrative, using the option flow and the full picture. So it doesn't make it fair to you in that regard. So if we look here at the $41 calls, we'll pull them up here so you can see how this played out. So again, the same kind of scenario. It was a call debit spread. I sold then the 41s to buy back the 39s. So essentially just kind of uh, one call debit spread into the next. And you can take advantage of that. The idea there with the call debit spread essentially is that you're speculating on an increase in price with a neutral to small increase in volatility. So essentially, you don't want the stock to get too volatile. You're looking for a slight increase in price, which they got, and that was their objective with that particular call debit spread. And we can track that because of the time when these trades were coming in and the flags and codes that were connected as a multi-leg electronic trade. So they were connected together. So that's how they kind of salvaged that trade, rolled up into a higher, basically essentially rolled up to a higher expiry, or pardon me, higher strike in that regard. So it's all part of a call debit spread. But yeah, that was the transition of the money. So it wasn't like, hey, wow, they bought all those 39s. Yes, in theory, but they bought them back. Open interest decreased and then sold the 41s against that position. Like I said, so if we go back over here to the $39 calls, we'll pull that up here. Like I said, the open interest decreased. So that ship has sailed in that regard. So when people are like, yeah, yesterday they're loading $39 call of $6 million in premium, they weren't. They were buying back something that they had previously sold and rolled it with a different call debit spread. So that right there is exactly why this option flow, you cannot just not know what you're doing and post it on X. You're not doing a favor to anybody in that regard. And I'll continue to break it down. I am a partner with Unusual Whales, so of course I'm going to have my feelings on making sure that others use the flow correctly, but we're all adults here. I'm not anybody's parent in that regard. But yes, that was what was going on in regards to those spreads yesterday. So we'll take a look at some of the other flow that we saw. I'm trying to look at the largest impact to the option chain, because you know how we've sorted it in the past, where we look at basically where the bulk of the actual cash was spent, and that's what I like to do. It kind of helps to drive, the story behind where the stock may go, where traders are betting for it to go. That's what we look for here. And over the last couple of days too, on the $32 calls for this week, like Friday, We saw a pretty good amount of volume come in for those, and about 6 million in premium, and we saw about half of that carry over to new open interest yesterday. Now, of the volume we saw yesterday, about 8,800 volume, we saw some open interest decrease. So, traders taking profits. Um, I don't blame them. Why wouldn't you? That's the whole point, especially on a short dated contract with extremely high implied volatility. Some might have been selling these and bought some back, but yes, the open interest did decrease actually just a little bit on the $32 calls for this week, but they are in the money. So let's pull up actually all of the option flow from Tuesday, and we'll sort it here by the highest premium. That way we got the full picture. And you're welcome to pause or screen record or screenshot, do whatever you need to do as well here. We'll take a look at these here. Let's see. The 39 we already talked about. Let's look at the $35 calls for this week. We did see some of that premium yesterday. It was about 36,000 volume yesterday and about 7.2 mil, I know, in total premium. But it was split between buyers and sellers. So some selling it, some buying to open, some scalping, some day trading. Because of all that volume yesterday, only 2,200 appeared in new open interest. So not a lot. And those are currently in the money. So those were trading for a low of about 166 and saw about 220, 240 yesterday. So the open interest did increase just a little bit, but nothing too crazy in that regard. $40 calls, which were out of the money, they saw about 4.4 mil in premium yesterday. Again, 13,000 volume, about 3,000 in new open interest. So these are about 12% out of the money calls. So also a combination of traders selling them and traders buying them as well. So that's kind of what we saw there. The 40s, the 30s are in the money. These 35s are in the money as well. Good amount of premium here attached. Nothing like too crazy and directional. I mean, the $39 calls were directional. You can see a lot of ask volume, but we just talked about the reasoning and the why here. And those 41 calls were sold to buy the 31s. So that's why it's heavily skewed with 81% bid. Try to look for things that are really skewed, higher than 50-50. The $32 calls we already talked about. Those 36s and 40s, that was part of, if you remember the call debit spreads last week as well. We saw some of those come through where they were selling the 39s and buying the 36s, which we talked about this morning. So a little bit of volume. Yesterday, 20,000 volume on those 36s, about 3.5 mil in premium. And open interest kind of around the same, just a little increase. Only went up 761. But those are just right at the money as GameStop trades at, 35.89, so pretty close there. And I'm sure it'll respond positive. We'll have to see. The stock has responded initially to the headline this morning, which is mainly driven by algorithms. It responded positively. We'll see what it does when the market actually opens fully. But here was like the bulk of all of your options traded yesterday. So it's sorted here by premium series, by highest premium. Then obviously your strike and expiry. You can take a look at this, pause or screen record. I didn't see anything that jumped out too crazy other than just betting on continuation, and some, a little bit of volatility. We saw some of those call debit spreads, which just are betting on, a slight increase in price with not much change to volatility. But yes, there was some good amount of premium, but let's make sure we're looking at the full picture on that premium. Like, for example, the $50 calls. I know people are like, hey, they're buying $50 calls for GameStop. There's about 3 mil in premium yesterday on there. Yes, there was some volume, 12,800. But note the open interest kind of took a big hit, down 3,400. So if we look here going back, where we can see some of this has been built in, as they were building these 50s, they were selling, selling, selling. And then let's see here. Could have bought them here and now selling, selling. So the open interest decreasing a little bit. Because some of that volume started to pour in here. Let's look at how some of that built out. We see how last Thursday we saw some volume and then open interest increased. And then a little bit of volume Friday. So yeah, just a little bit came in and then boom, a nice sell, take some profit. Sell, take some profit. And then open interest decrease. Now, granted, some of the contracts Could also change hands. They will do that. But more than likely, here some traders selling calls, and hopes that it stays below 50, so they'll sell a covered call, or could be selling and that they're taking profit on something that they had bought previously. So a lot of different scenarios in that regard that could play out. So not a lot, but a few different scenarios. So I didn't see anything else that like really was like, hey, let's look at this. Hey, I like looking at deep in the money calls. For example, about 2 mil in premium yesterday on these $16 calls for January. Now you see the volume come through here. A little bit of change to open interest increase there. So let's take a look at that one. About 1.7 mil on that candle. I think that came through as like a multi-leg as well. Yeah, detected as multi-leg here. Let's see. Let's try to see what they were actually doing. Appears maybe selling $100 calls for June. That could have just been this coincidence of the timing and the fill. Let's see, it was multi-leg. Okay. Sell hundreds and buy 16s. So sell deep out of the money calls, buy deep in the money. Okay. And just roll. That interesting strategy there. Sure. But yeah, I'm seeing those come through though. So yeah, multi-leg, multi-leg, multi-leg. Now here's like a single leg one. So it's not always, like I said, it's not always an exact science. Sometimes spend a few minutes and go back through it, take a look at it. Okay, here. Now this makes much more sense. Call debit spread. So we're selling $17 calls for January to buy 16s. That makes much more sense. Okay. So, and those are deep in the money, so it's a more expensive strategy. A little deeper pockets on that one, but it's still a call debit spread within the money calls. That's fun. That's profitable. So you're essentially there when you got deep in the money. Think of these as like they move kind of like the stock would. So how the stock is reacting, that's how these are going to move up and down. So the closer you get, the further away you are, deep in the money, you have a high delta. The higher the delta gets to one or close to 100, however you phrase it, then it begins to move just like the underlying stock. So that's why you see a high delta deep in the money scenario. As GameStop trades at what, 36 as we're recording this morning. Yeah, so like I said, it's up there. Let's pull on our extended hour data. Yeah, 3603. So it's up there. It's kind of where it was at a year ago, back when Roaring Kitty was lurking around. Higher. 3503 is higher than it was in December and January. Higher than it was last June. So yeah, we're in that same kind of time period we were last year. That's kind of fun. This time last year, this date last year, May 28th, the high was 26. Now the stock's 35, 36. That's incredible. So I know, and people are excited about the Bitcoin. They are 4,710. I know. I was waiting. I think a lot of people were waiting, and I thought, well, that's interesting timing to drop that SEC filing this morning. It was, like I said, it was pretty early too. We'll go to let's see here. Like I said, 5:43. So 6:43 New York time. So yeah, it was pretty early when that came out. Just dropped that nice little press release, just like, hey, we got these 4,710 Bitcoin. We have 500 mil worth of Bitcoin now on the balance sheet. So yeah, just a nice little simple press release. But that's what I got in regard to the option flow. Like I said, they're just continually betting on this continuation, some slight upside. Last year's prepared you for this. The only difference between this year and last year is last year when the stock was trading at this, it had three stock offerings, but GameStop ended up raising a ton of cash. Now GameStop got what, 6 billion combined with Bitcoin and cash, roughly, probably 5 billion, 6 billion, six and a half, depending on where they bought the Bitcoin. So they're in a much different situation this year now with all that cash than they were a year ago. at trading at the same stock price. So let me repeat what I just said. GameStop is in a way different position now with all this cash trading at the same price than it was a year ago trading at these prices. Just think about that for a second. More cash on the books. More cash on the books. So, will they continue to dilute per se through convertible notes or issue shares? I'm not sure. So we'll see. We'll just continue to watch. We'll continue to watch the option flow. We continue to watch the volume. We watch the chart. We continue to report it. We continue to post videos every day about it. Why? Because I enjoy it. I try to help everybody out because I get a kick out of reading the replies and the messages about, hey, that was awesome. For example, everybody that reached out, I know, for everybody that reached out about AMC, they were like, bro, you were really ahead of AMC when it was trading at 270. You were talking about the $3, 350, building the gamma ramp. Boom, the stock hit $4. Congratulations. Those calls, I think yesterday were the 300s I talked about. I made a full video on it over a week ago, just about AMC and the same kind of gamma squeeze setup, the same kind of setup you saw last year, and it played out to a T. In fact, alerted those calls back when AMC was trading around 293, trade at 379, and the $3 calls were up 700%. So, and in the money. Hey, what do? I just share the option flow as I see it, as I like to try to help other people. So yeah, but that's what I got for you. If you watch the video all the way through, you're awesome. Why don't you reply on this X post or comment on the YouTube video? GameStop buys Bitcoin. And then I'll know you watched today's video all the way through. But I hope you do have a fabulous day. Bright and early. It is Wednesday. And guess what? Next Thursday is the midnight release for Nintendo Switch 2. And if all goes well, wink wink GameStop, it could be live at the GameStop. Live at GameStop. Yes, that's right. Live at GameStop doing a promotional piece for the Nintendo Switch 2. That might just happen, wink wink. But more on that to come. Anyway, don't want to spoil too much. Everybody have a fabulous day and be safe out there. Happy trading. Keep a smile on your face. And I'll see you lurking around the internet.